What's going on, everyone? I don't even know where to begin. Today was such a wild and crazy day in the markets. I mean, literally, from when the Asian session opened up on Sunday to before the New York session opened today on the 7th, we were down one point in time 700, 800, 900 points. We were almost approaching 5% down before the week even started. And I know there was a lot of people calling for this Black Monday, this, that, and the other. Let's just talk about exactly what happened, because today, probably, I believe, in my 11 years, 12 years now almost of trading, this is probably the second craziest day I've ever seen in terms of volatility. And one of those days prior goes back to the C19 crash. But if we're kind of talking about exactly what happened here, we know that we're already in bear sellers context, right? We're trading below our weekly 50 SMA, below our linear regression, below our 100 SMA. We are approaching 20% down as of last week, or just over 20%. I think today we got down from all-time highs to where we kind of stand. And we're looking at the triple Q chart, which is the NASDAQ 100. We're down about almost 25, 26% from all-time highs. About 100 and I believe about 130 point haircut from the top in just a matter of 2 months. Very, very quick decline here. Now, here's something that I want to kind of take away from all this. The faster we go down, the more likelihood you have of these big extreme pushes up. I mean, literally, almost from the word go, we kind of put in a bottom off the New York session opened, and then we rallied at one point in time 200 points in a 5-minute candle, 400 points. We went all the way from red to green, okay, which is crazy. We had almost on the NASDAQ futures almost a 1900 point reversal high to low swing. I mean, if you trade prop firms and you trade futures, good luck, because it's very, very dangerous. Either you were on the right side of the move very, very quickly, or you just got absolutely torched on your accounts. Now, the reason why I'm looking at the triple Q chart is because the numbers are going to be a little bit easier to read, instead of having to read out big numbers. We can just focus on what the QQQ is. The charts are going to be the same. So we're looking at the weekly chart. Obviously, we confirmed last week's lows, and we're in the middle of this range now. Now, this purple line and this purple line that I have here on the chart, the dotted lines, was what I marked out as a bear market zone. Okay, so this is our zone that puts us into an official bear market. So as long as we're in this zone, we're in an official bear market here. That's greater than 20% down. Now, I have support here at this 200-day moving average, which I've been calling for the past couple of weeks now. That, if we were to lose this level here, when we were losing 465, I was calling for about 440s. Okay. And again, I'm not predicting where the market's going. I'm just using the chart. I'm using a weekly set of supply and demand. And I'm just kind of telling myself this: I'm going to trade the facts. The facts are, if we lose an area of demand, well, there's a high probability that we're probably going to go to the next area of support, right? If we reclaim an area of supply, well, there might be a good shot that we're going to try to test the next area of supply. Okay. So you can see here, today's pop got rejected at our 100 simple moving average. Now, there was a big rumor today that potentially there was going to be a 90-day pause on all tariffs except China. That's false. But while that news was, not declared false yet, the market was absolutely screaming. I mean, I was looking at a trading view chart and a trader vate chart for my prop firms and for trading futures. They were mix matched. Like, there was different prices going on one chart, different prices on another. And that was just nothing more than major volatility, and the platforms were having issues probably keeping up, and it was just all over the place. I feel like I'm all over the place in this video. Let's kind of back it up and let's make things simple. This area that we got rejected today, we need to reclaim 443. Okay. So if you're a NASDAQ futures trader, put a 100 EMA on your chart and also put a 100 SMA on your chart. Okay. Those two areas are going to be clear areas of supply. this market's not going any higher until we close over those levels. There is no ifs, ands, or buts about it. This is almost setting up this weird looking kind of maybe inverse hammer candle here on the weekly. I think that we're coming down to 383. That's going to put us down close to 30, maybe even over 30% down. And I think that's where the market starts to recover. And I think that's where the market starts to find its bottom. Okay. I think we're going to hear something, emergency rate cuts. Okay. If we don't hear something about emergency rate cuts, or, you know, some type of pause with the tariffs for an extended period of time, I think that this market continues to trickle down. Okay. Now here's what I want to kind of focus on. Let's go into the NASDAQ 100 futures chart. Okay. So let's kind of get some of these futures levels going here for all of us futures traders. The level that I'm looking at here, 15,800. Now, when I was, when the market was trading up here towards 19,000, I said, don't be surprised if you see this market trading at 17,000. And some people thought that was absolutely crazy. Guys, don't be surprised if you see something trading in this market that has a 15,000 on it. Okay, 15,000. Now, can we push from here? Do we have to get down here? No. Is it common to see price stop in the middle of the range? Not really, right? I mean, if you're in the middle of the range here, more than likely either we're going to get a very quick recovery where this week, the week of April the 7th, we close over a price of 18,356. This might be the low. If we fail to close over 18,356, we will come down here and test 16,200, if not 15,800. And I think this is the ultimate landing spot. And I think it's going to be around here where we hear something: A, emergency rate cuts; B, an extended pause or dismantling of some of these tariffs, or something along those lines. What I can tell you right now for the short time being, we've got to be extremely patient and extremely cautious. I will be trading 1 or 2 micros for the foreseeable future. Some of these 1-minute candles today were 80 to 120 points. There's no shot in hell that I'm going to be able to manage a position with 1 or 2, 3 mini contracts when literally today we were jumping 10 to 15 points a tick. Does that make sense? So when you're jumping around like that, you don't even have to be wrong on the trade. You just have to be a blink of an eye too late or too early to the move, and it goes down 15, 30 points and then right back up in your favor. And next thing you know, you're stopped out. 1 or 2 micro contracts for the foreseeable future across all my fundeds and even my evaluations. I have no intentions of trading anything bigger than that. You can laugh at me. You can tell me I'm a scaredy cat. You can tell me that, I don't know what I'm doing because I'm going to go and trade 1 or 2 micros. I don't give a shit. I'm going to protect my money. I recommend that you protect your money the best way possible. That's what we're going to do here, guys. What I'm really watching this week, and again, this is kind of just a macro overview. The main thing that I'm watching this week is, do we close over 18,400 or not? Okay. Do we test 16,100 or do we test 15,850? That's it. If I'm in the middle of the range here, everything is a scalp. Everything is, for sure trading 1 or 2 micros. I'm in, I'm out. I'm not looking to F around and hold these positions for too long. Guys, be extremely cautious. There's not a whole lot I can say about today's price action. Some of the common questions that you're going to hear: why is the market moving so much? Guys, let's just put it this way. These are crazy times, okay? Don't worry about why the market's doing what it's doing. Focus on what you can do to trade the market that you're given, okay? Does that make sense? Something else. Well, if the range is so big, what do I need to do so I don't get blown up? I'm telling you, trade 1 or 2 micros, open up your stop loss probably by double. If normally you're giving yourself 10 or 12 points as a stop loss, you probably need to be closer to 25 to 35, 40 points on a stop loss. But that's too much, but you're only trading 1 or 2 micros. The same thing for your profit target. If you're normally taking 5 points, 10 points, we probably need to try to get 15, 20, 25, 30 points because of the fact that the range is so big, okay? So we're not going to risk 30 or 40 points to take 5 points. It's just not going to make any sense. We've got to open up on both sides, but we've got to size all the way down, like all the way down. Hope this video helps you guys. If you guys need accounts, you can use code DAnthony. That's going to save you whatever the best available discount is with Apex and daytraders.com. I am also trading with Top One Futures. I like it because they have the Project X platform and they have that lockout feature. I really like that. I'm going through a combine right now with Top One Futures. You guys can get a discount. That link is down in the description box below. I'll see all of you guys on the inside.